So continuing the theme of maybe trying to, delve into what can be the indirect ways of investing in EV vehicles, we have another company which is at the forefront of serving a lot of global leaders which are trying to make strides in the EV revolution. Now we can make a choice either to make an investment like in a company called Tesla, which can maybe make you a very good investor in terms of the returns that it can make, but it is also a very high risky trade that if you make an error in terms of the technology which which Tesla is betting, and if that doesn't scale up and maybe BYD scales up or BMW scales up or some other company scales up, then your investment can be at a risk. So what is common between these companies which are transitioning into EV? And if you look at, like Shivalik was making these shunt resistors that go into the battery management system, all these companies also need assistance in maybe transitioning their powertrains into a EV powertrain, right? Or transitioning a lot of their manufacturing capabilities when they want to manufacture electric vehicles. So if you look at whether a BMW is announcing a new battery or electric vehicles, or maybe any other companies is announcing its strategy to enter to BEVs, there is a lot of transition that needs to happen. So one very important theme that we also again observed is that which are the companies which can transition. And again, we came up with a very unique company based out of India, which was announcing these orders that it was getting maybe from a BMW and also as recently as from the Honda Corporation, that has given them multi-year, multi-million dollars contracts to make their manufacturing transition towards EV vehicles. Now, it's not as easy that once you set up a whole supply chain of your raw material suppliers, your ancillary suppliers, and also your finished good power assemblies in terms of manufacturing the ICE vehicles to completely turn to EV vehicles, right? And it's a long transition that needs to happen. And all these companies, when they are transitioning, in fact, are making a lot of cost to transition, right? Are investing a lot of capex to transition, right? Hence, earnings for these companies for a significant period of time would be depressed, because they will have a mix of their revenue from battery operated vehicles and a mix of the revenue from maybe the traditional ICE engines, and they will in the medium term will have to grapple with the suppliers for both the value chains, and hence invest heavily in maybe also the new segment, but the old segment is also not going away to zero, and hence focus on that also. So generally, when the transition is happening, till the whole transition takes place, it is not advisable to invest in these companies which are making high capexes to do that, right? But companies which are helping this transition for the medium to long period of time, some midterm, they are the companies which benefit the most, because till the transition has not got completed, the opportunity that is there in front of them to make this transition would mean a high portion of revenue growth, would mean higher margins, because there is competition amongst various large auto OEMs to secure these deals, to secure their supply chains, and to move fast towards the new vehicles, because if they don't, then their competitor can move fast.
अगर आप ये वीडियो देख रहे हो तो इसका मतलब ये है कि आप स्टॉक मार्केट ट्रेडिंग और इन्वेस्टिंग में इंटरेस्टेड हो। अगर आपको बहुत सारी ट्रेडिंग स्ट्रैटेजीज सच एज एल्गो ट्रेडिंग, फंडामेंटल एनालिसिस, टेक्निकल एनालिसिस के बारे में और जानना है, देन हेड ऑन टू upsurge.club, जहाँ पे हमने हर कैटेगरीज के बारे में कोर्सेज बनाए हैं।
If you can find a company which can benefit out of competition within the industry, is the best way to go ahead, because larger corporations are always oriented towards being the first mover, starting to make a lot of investments and try to be ahead of their competitors to make their company relevant to the audience. And KPIT is the company that I'm talking over here, which has over and over again every quarter proven that it is helping these large conglomerates around the world to efficiently manage the transition. And if you look at the newer technologies that are being talked about in the vehicle space, whether it's autonomous driving or connected vehicles or assisted driving, ADAS, everywhere KPIT has won large multi-million dollars contracts for multiple years within the space, and it is the fastest growing, in fact, tech company around the world which is in this space, and has been re-rated because the order book incrementally is coming from this new business which is higher margin, which the capability KPIT had also developed over the past many years, and now it is rolling it out. And the good part is that more and more customers, as they get added on KPIT's kitty, the cost of servicing the newer client is in fact cheaper and cheaper every time because of the learning curve that it has. So imagine that AI is solving, maybe ChatGPT is solving a lot of things as and when it is getting used more, right? Because it has more understanding. Similarly, the business model of a company like KPIT, where the more client it is winning, every time the cost of execution goes down and the learning of the previous client helps it to serve better the newer clients and in fact improve its services amongst our clients. And for a new guy to enter this space, to help transition a BMW or another global OEM would be even more tougher because they don't have the R&D of 4 to 5 years, which KPIT has an advantage, right? They cannot have the nuances that KPIT has already plugged the loophole with and is ready with a system and a platform. With the more people use, the more the platform becomes better. And that is where, if you look at, if we believe what Tesla is talking about, that the future is of autonomous vehicles, or the large OEM manufacturers are transitioning for an ADAS system, at least where they need a lot of assistance to the driver to reduce the mishaps on the road, your vehicle need to be aware of the surroundings around. It need to be connected to the other vehicle so that it is able to communicate what it is wanting to do. And to enable all these things, you need a guy like KPIT to make the software amendments, to make the middleware company, which is maybe attaching the necessary software to the hardware of the vehicle so that the vehicle manufacturer can transition it smoothly. So that is where a company like KPIT, if you look at both its revenue and margins are going up. But if you look at, the revenues might have gone up just 2.25x, but the operating profits have gone up 5 to 6x. That's 100 crores operating company has now almost 600 crores of operating profits last year and is on a journey of going to 1,000 crores of operating profit. The market cap has swelled from mere 3,000-4,000 crores to around 22,000 crores. And this journey we were able to enjoy because of the simple mindset that we had, that which is the company which gets benefited by creating a platform for the transition of the vehicles on ground. Because if you look at a connected vehicle, if you look at a vehicle which has ADAS, or if you look at a vehicle which is autonomous, they will require services to transition, because the domain knowledge of the automobile manufacturer is not having these systems. The domain knowledge was in ICE engine, or the domain knowledge is maybe having the supply chain or the auto and supply chains, and not these soft aspects of maybe bringing software and hardware capabilities together. The more and more we are advancing, the importance of software driven hardware is increasingly becoming important, be it automobiles, be it spaceship, be it any wake of engineering services that we are seeing. And companies which are solving that for these global giants are the companies which in fact are making better returns on their capital than the engineering or the global giants themselves, right? So if you look at now the revenue breakup of KPIT, which is almost 30-35% powertrain, 11% automotive vehicles, ADAS contributing around 20%, is increasingly going towards connected and ADAS, and that's a high margin business. And the margin which was hovering around maybe 10, 11, 12% are going to 20% now, and that margin trajectory can increase going forward if the order wins keep on happening, if the scale at which KPIT is operating goes up. But I'll not recommend that the valuation that is trading right now justifies the whole business growth, because there are a lot of things that are still getting proved and will get proved in the future, and the market is currently paying KPIT for execution, which we believe can hit road bumps. There can be a Tata Elxsi or some other company which can maybe give a tougher competition, and hence there can be a problem. But when the whole thing started out, it was very easy in a way at a market cap to make a decision whether you want to enter in this company. If you believe that the world will have hydrogen vehicles or EV vehicles or any kind of transitioning, KPIT is not saying that we will only transition to EV, right? They can transition to hydrogen vehicles. Any technology that you're talking about, it can help the global companies to transition to that technology, is what the beauty of the platform is, right? And that is where, if you buy these kind of businesses, which are not per se platform, like startups which burn a lot of money to make that platform for a longer period of time, like Zomato has done to make a platform for food deliveries, right? It is burning its own cash. Here the platform is being funded by global OEMs to transition themselves for the new age services or new age technologies, and based on the investments made by these giants, the business keeps on improving, the platform keeps on improving, and there is no burning of cash. In fact, the margins keep on improving, right? That is the kind of operating leverage business you want to pick, because in a platform which is being fed by cash, the only benefit that it has huge cash that the investors are pumping in, which can go away, right? Which can easily vanish in difficult markets, which we've seen when the interest rates in the US were going up, what has happened with the valuation of these businesses, right? But if it is a self-sustaining model where the business is generating cash and is improving its profitability, and the operating leverage is kicking in because of the platform growing, is where you need to focus on. World over, airlines might have not made money, but the platforms which provide the software for airlines, their ticketing solutions, their automated driving solutions for the airplane, they have made a lot of money, right? So it has happened business over again. It is observable amongst various businesses in the world. But to observe this in a different industry and to extrapolate it in a other set of industry is the skill that you require and the vision that you should have, that what can happen in the 5 to 6, 10 years. And the risk that you're taking, if it at the starting point is less, then your chances of losing money is reduced, because the valuation, if you've given it right and it is not a cash burning business, then at least you only have the opportunity cost of money that it did not grow that well, right? But you don't lose capital. But you lose your capital if you put your money on a platform which is in fact burning a lot of money to create that platform, right? So that is where at Nivesha we always focus on businesses which are not losing cash to develop their business, because that in fact is a strategy which can make 100x, but that's also a recipe of disaster which can take your business to zero, or the value of the business substantially lower than it was quoting at that point of time. So KPIT in a way was that kind of a business. A lot of other businesses have similar profiles, be it defense, be it in a lot of other domains. You should have the eye of seeing through the business models and not going by the jargons, but analyzing the whole supply chain of the business or the value chain of the business and trying to make it into buckets and bet on them, rather than the analyst community telling you that this is a platform business, this is a non-platform business, this business has this characteristics, this business that characteristics. You should be able to see through the business models and try to identify where the platform is getting created or where the value is getting created. And if it is taking 2 more years, then maybe some other company. But if it is happening slowly but surely without burning cash, is where you should always focus on. So that is how, in a way, we put up a portfolio. There are a lot of examples, but these were the 2 prime examples that we wanted to share, wherein we've seen the trajectory going up well. There are businesses where it has not gone well, and maybe the investment has gone down. But the point is, where we've lost 30%, but where we've gained, we've gone up 3 to 5, 7x. So your 100 rupees becomes 300 or 500, but when you lose, your 100 becomes just 70. So if I have taken 2 bets and one has gone from 100 to 300, the other has gone from 100 to 70, still my total investment capital is 200 and my total of the market value is 370, right? So I've almost doubled my money, even when one business has not done very well, because when I gain when a business like this does well is far higher than what I lose, right? So that is how we structure our investment. We preemptively try to position ourselves when the valuations are low, because if you wait for the transition of a KPIT to happen or a Shivalik Bimetal to happen, you will not get the valuation right? The 3,000 crore of valuation of KPIT would move to a 22,000 crores, or a Shivalik's 200-300 crores valuation would go to a 2,500-3,000 crores. And betting at that point of time is a typical mistake that most of the people or investors in the community make, wherein they want to bet and take and extrapolate it further. Even if the business growth happens, the point is market has given it 5 years value right now. So you will spend 5 years not making any money, because market has in its and Buffett has used this, multiple times, communicated this to a lot of investors, that Mr. Market is that friend of yours which gets overexcited and which also gets, very much gloomy about things, and it is not rational. Whether you want to, take benefit of that irrationality, or you yourself become irrational and join the party of Mr. Market in paying high premiums to these companies, is the choice that you have. But over the years, it has been proven that more people follow Mr. Market, the more they lose rather than gain. So that is what we wanted to communicate. Thank you so much for listening.